can't really control the fluctuations in the market. You can control your reactions to them. So in this particular case, my view on Bitcoin is the reason to do it is because it represents freedom and sovereignty, truth, integrity, and hope for the world. And that being the case, it's going to outlast all of us. My view is, if we're remembered for advocating and accelerating the adoption of Bitcoin throughout the world, then that will have been success, and I don't really need anything else.
It's amazing.
And I'll take the beatings as they come or go in order to get to that end goal, because I'm sure it doesn't come without turbulence.
MicroStrategy founder and executive chairman Michael Saylor has broken his silence on the choppy price action Bitcoin has experienced over the past few days. Saylor, a renowned business executive, is no stranger to market turbulence. He once lost $6 billion in a single day during the dot-com bubble, an experience that must have prepared him for the extreme volatility of the Bitcoin market. About 2 days ago, when Bitcoin dropped below $63,000, Saylor tweeted, "Volatility is votality." The post, which now has over 10,000 likes on social media platform X, captures Saylor's attitude toward Bitcoin and crypto volatility. In a 2021 interview with Stansberry Research, Saylor had this to say about Bitcoin's volatility. "I think that everything that's living on this earth is volatile, and things that are dead are not volatile. So, I would much rather have a volatile 300% return than a non-volatile 15% return or a lesser return. Stability is stagnation. Volatility is vitality. Living things are volatile. I like living things. I want to live. Life force implies volatility." The MicroStrategy executive chairman recently spoke at the Abundance Summit, hosted by Peter Diamandis, a fellow MIT-trained engineer, entrepreneur, and physician. Peter and Saylor discuss Bitcoin's volatility and 30% corrections, as well as how Saylor successfully convinced MicroStrategy's board to adopt a Bitcoin strategy in 2020, an idea that was most unpopular in the traditional investment world at the time. According to the renowned business executive, the board either had to adapt to the changing economic and financial system by buying Bitcoin or watch the software firm die a slow, painful death. Since then, the Virginia-based firm has gone from the initial $250 million investment to a massive $7.5 billion holding of the leading cryptocurrency. As we bring you more clips from Saylor's chat with Peter, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Also, ensure you drop your comments and check out our other videos. Everything you do helps with the YouTube algorithm and contributes to the channel's growth. Thanks, and enjoy the video.
What was the process of getting a public board to do this?
Well, in that case, I actually pulled the 3 most compelling videos on Bitcoin off of YouTube. You know, an Andreas Antonopoulos overview of Bitcoin, a debate by Eric Voorhees and Peter Schiff over Bitcoin versus fiat currency as money, probably some other background on Bitcoin. I put those 3 together. It's probably 3 hours of watching. I included some articles, some short articles maybe by some of the Bitcoin OGs. I sent the package off to each board member. I said, I've got some homework for you. It's probably going to take 3 to 5 hours for you to read through all this. Read through all of it, and then I want to meet with you. And I set up one-on-ones with each one of them. And so I met with each one individually. I answered their questions. Then after that, we had a group meeting. Then after that, we broke into committees to study different aspects, the accounting, the disclosures, the whatever. And so it was a group process. And of course, the CFO and the general counsel at the time were also heavily involved. It was never a question of do it or don't do it. It was an observation that the world had come to a grinding halt. We had $500 million yielding 0% interest. We were our stock had hit $90 a share. The enterprise value of the company was about $60 a share. And we were under pressure from our shareholders. You know, it's like you have half of the market cap of the company is cash. You're earning 0% interest. You're not beating the cost of capital. The cost of capital is the S&P return. So anybody looks at it says, if you're not getting 8, 9, 10% on the capital, you should give it back to us so we can invest it. And so we've reached a point where the company was looking at a fast death. We just sell the company and call it a day. Or a slow death. We keep the cash and the stock is dead money, and that means the stock options are dead money. And that was the time when it used to be employees work for you because they liked the community and the schools and their home, and maybe they were loyal to you because they saw you every day in the office. But think about what happened in the second quarter of 2020 when nobody came to the office and they could change jobs and go work for Amazon, Facebook, Microsoft, or Google without moving. All you do is just repath your Zoom account. And so all of a sudden you're staring at big tech, you know, the big tech companies more powerful than most countries and getting more powerful. And you've lost the human connection. They don't have to move to San Francisco. They can simply take a job. And nobody ever got hired by big tech for less money than they're making working for you. From our point of view,
you were on the precipice of a serious...
It's like sell the company or just watch all your employees dwindle. You're going to get boiled off. And after the good employees leave, you know, the product will gradually deteriorate. You know, and you're competing against a digital monopoly that has more power than all but 4 countries on Earth. And so we either do that, or we take a risk. And so we were basically at a point where maybe we should take a risk. Now, having said all that, what really happened there is we deliberated. It took a long time to deliberate, a lot of education, and at the end of the day, we ended up announcing that we were going to do a Dutch auction and buy back $250 million of the stock at a premium coincidental with the purchase of Bitcoin.
When MicroStrategy made the first $250 million Bitcoin purchase in August 2020, it became the first publicly traded company to do so. After the latest $623 million purchase, which Saylor announced earlier this week on X, MicroStrategy now holds 214,246 Bitcoin acquired for approximately $7.53 billion at an average price of $35,160 per Bitcoin. The latest 9,000 plus Bitcoin addition to the firm's Bitcoin holdings was bought at approximately $67,382 per coin, cementing Saylor's high conviction in the leading digital asset. During the discussion, Saylor also revealed that his first Bitcoin purchase in 2020 was for his personal holdings. Months before the MicroStrategy announcement, Saylor had bought 17,732 Bitcoin for $175 million. Today, Saylor's stash is worth over $1.1 billion, a 548.5% profit margin at current market prices. Let's get back to the fireside chat as Saylor speaks further about the impotence of Bitcoin in today's world of constant monetary debasement.
Yeah, I think that the biggest challenge in Bitcoin is that the industry refers to it as a cryptocurrency, and oftentimes people refer to it as a digital currency, and there's a very vocal contingent that wants it to be a currency, and the rest of the world doesn't really understand money. So that being the case, let's view this from first principles, right? Money's economic energy. If you want to store your economic energy, you put it in assets. And the assets have different half-lives with which they store the energy. Any textbook economist will say money is a store of value, medium exchange, unit of account, and they stop and they don't really think much beyond that. And then they'll like bark at you that you don't have money because you don't have, this is not good for a medium exchange, but nobody really thinks about what they just said. So if you thought about it, you would realize that about 120 currencies in the world are mediums of exchange. The peso is a medium of exchange. The naira is a medium of exchange. So weak currencies the Turkish lira, the Lebanese pound, their mediums of exchange. You can find a lot of them. The Venezuelan bolivar, medium of exchange. But if you go to South America, you'll find that it's not a unit of account. If you go to Argentina, the unit of account is the US dollar, and they think in terms of dollars. So there are only 3 currencies in the world that are units of account. They're the euro, the dollar, and the CNY. And so why is that? Because the mediums of exchange are weak currencies inflating at 14 to 24% a year. They're losing their economic energy over 3 to 5 years. The half-life of the money in the asset is about 5 years or less. Sometimes it's only 5 months. Like in the Naira, they lost 75% of their energy last week. So the medium of exchange only is dictated by the government as legal tender. Every government that's functional will dictate their currency as a medium of exchange and enforce that. The unit of account is generally the dollar, the euro, and currencies pegged to the dollar, and the store of value. Well, nobody in the United States thinks the dollar is a store of value. No rich person. If you look at wealthy people, they would say the store of value. If they're really wealthy, if they're billionaires, they own buildings, blocks, huge properties, or they own the Patriots. They own a sports team, a soccer club, or they own a collection of Picassos. That's what the wealthy use as store of value. The middle class store of value is the Vanguard 500 or S&P index. It's SPY. It's basically been the S&P or QQQ. It's basically a diversified portfolio of stocks, and that's been the status quo since 30, 40 years ago when Bogle did that. So the world today consists of 120 mediums of exchange, about 3, 4 units of account, no currencies or stores of value. And if you say to someone, what do you think about Bitcoin as digital currency? They say, well, I think it threatens the dollar, I hate it. If you said, what do you think about Bitcoin as digital property? I'm going to buy it instead of buying a building in Des Moines. They're like, oh, have at it. If you simply conceptualize it as property, which is store of value, all of the objections, all of the straw man objections, like it's used for money laundering, it's not legal tender, I can't buy coffee with it, it's not fast enough, it's not private. All of these things disappear because it's about as stupid as saying to Bob Kraft, you can't buy a cup of coffee with the New England Patriots by breaking off one of your tight ends. And you can't buy a cup of coffee with your building in Boston. So of course I can't. You can't buy a cup of coffee with part of a Picasso, the lower left corner either. But wealthy people have been using them as a store of value and as money for 500 years.
Saylor is advocating for a shift in the perception of how people view Bitcoin, less as a currency and more as a billion-dollar building in cyberspace. The MicroStrategy executive chairman presented similar arguments during an interview with CNBC, explaining that there is a fundamental misunderstanding regarding Bitcoin's utility. Saylor believes that Bitcoin's true value lies in its ability to preserve wealth over centuries, just like you would find with a valuable piece of real estate or an expensive artwork. According to Saylor, presenting Bitcoin as a digital property aligns more accurately with its function as a store of value rather than a medium of exchange. In addition, while the Bitcoin as a currency argument makes governments and institutions wary, Saylor believes a shift in perspective will make them more readily inclined to embrace the leading cryptocurrency. The shift will also stop critics who repeatedly argue that Bitcoin should be used to purchase a cup of coffee. Do you agree with Saylor's arguments about Bitcoin's status as a digital property? Please share your thoughts as well as your comments on his discussion with Peter in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.